Shares of Tesla have come down 10 to 11% the day after it released their Q2 numbers, and to be honest, rightfully so. Is it an overreaction? In my opinion, no. I mean, the overall market is down, so that doesn't help the cause either. But if we look at the graph right now, Tesla stock did go up quite a lot since April. And it did go up based on what? Based on the 8/8 event? I don't think so. Shareholder meeting and vote? Maybe a little bit, yes. But other than that, Wall Street, like I've been saying for weeks and weeks, Wall Street only cares about what happens in the coming quarters, about what happens in the next 6 to 12 months. So that's increase in sales, margins have bottomed, yes or no, increase in cash flow, profits, and so on and so forth. Not really focusing a lot on energy, let's be honest. Not really focusing a lot on FSD or robotaxi network. Definitely not focusing yet. There are some, Adam Jonas being one, focusing or at least acknowledging the potential of the Optimus bot. If we look at what has happened in the last couple of months for Tesla stock, I mean, it's nice. I'm a shareholder, so of course I would love to see the stock go up and up and up each and every day. But there needs to be a good reason. So I'm not surprised to see a pullback right now because Q2 was a okay quarter. Nothing that really surprised us that much other than maybe the regulatory credits being way more than previously thought. There was some restructuring cost as well. Okay, cancels out a little bit. But overall, what did you expect? Q2 suddenly becoming one of the best quarters for Tesla. Suddenly outlook is super rosy. No, we knew that 2024 is going to be a year of basically flat and hopefully not that much down. Thank God they still have the energy side of the business. Because otherwise, things would have looked way worse. And probably with the regulatory credits as well. Now we're going to touch on all of that. Yesterday we did a live stream for the earnings report and earnings call. I know it's extremely long, so I'm going to put everything in this video, share my thoughts, the good and the bad. If you're interested in that, hit all the buttons, especially the notification bell, because I do believe that that's the best way to support the channel. But if you want to support me even further, do check out the links down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so, quick overview here. Total automotive revenues decreased 7% year over year. Energy generation and storage revenue, as we've seen, up 100% year over year. Services and other revenue up 21% as well. Now, I do want to stop here for a second because although these are quite small compared to the automotive revenues, they are growing much faster. So each and every quarter, they are growing faster than the automotive one, and they are more profitable than the automotive one as well. So as these segments of the business become bigger and bigger, it will have a more positive impact on Tesla's bottom line. Now, of course, in the long run, we would love to see the automotive revenue reaccelerate and grow year over year. And so overall, total revenue came in at $25.5 billion, $890 million in regulatory credits. Total gross profit came in at $4.57 billion with total gross margin 18%. That's down 23 basis points year over year, but it's up quarter over quarter. So maybe we are now in a, let's say, quarter or two time frame where GAAP gross margins are bottoming out. And the same could be said for operating margin, although that year over year took a bigger hit, down 333 basis points, but up from 5.5% in Q1. If we look at adjusted EBITDA margin, that continues to go down year over year, quarter over quarter. That sits at 14.4%. And as Elon said in the last quarter, so sometimes he does say things that do happen on time, free cash flow came back. We're now at $1.34 billion. That's up 34% year over year. Continuing here, storage deployed. We knew this was another record quarter, up 158% year over year and up over 100% quarter over quarter as well. Supercharger stations are up 23% year over year, and supercharger connectors up 24% year over year. Energy gross margin came in at 24.6%, and services and others at 6.4%. And so when it comes to the profitability side of things, I mean, automotive gross margin came in at 14.6%. That's not great. So they say here our operating income decreased year over year to $1.6 billion, resulting in a 6.3% operating margin. Year over year operating income was primarily impacted by the following items. So impacted by reduced S3, X, and Y vehicle ASP, as noted above, restructuring charges of $622 million, increase in operating expenses largely driven by AI projects, decline in S3, X, and Y vehicle deliveries. Now here, this is from Troy TSLA on X. Here you can clearly see that since the peak, which was 30%, so it basically slashed in half, well, it doesn't look great. Now, of course, back then, they priced their cars at an extreme premium. Back then, interest rates were, well, close to zero. Right now, that's not the case anymore. Plus, right now, you also have Giga Berlin, Giga Austin, so that doesn't help the cause, especially if there is a slow demand for EVs, if there still is high interest rates, if people cannot get good rates to buy a new car, or put it simple, if people do not have the money to buy a new car either. Now, you're going to say, yeah, but the other automakers are seeing some growth year over year. Yeah, but show me another automaker that is making money on EVs. I'm sure it's great when you sell hybrids or ICE vehicles, but when you talk about EVs, I doubt that's the case. Plus, if you want to mention GM or Ford, they have their own financing arm as well. Now, on the other side of things here, I mean, this is truly remarkable. So FSD V12 miles and the overall FSD miles, I mean, lots and lots of growth. Although we're not really getting that much data on FSD and the drivers and adoption rate, take rate, and all of that. Because let's be honest, if it truly was very successful, they would have 100% mentioned it in the earnings call or even in the earnings report. The fact that we keep on hearing that once they use it again and again, I don't believe it. To be honest, I don't believe it. Then again, not that many people have access to FSD, so there is that, but this graph here is quite good. They also say here that Optimus is performing its first task, handling batteries. We've seen the video of that in one of their facilities. The south extension of Gigafactory Texas is nearing completion and will house our largest cluster of H100s yet. With regards to batteries, in Q2 they produced over 50% more 4680 cells than in Q1 and continue to see cost improvements. In July, they enter validation of vehicle testing for their first prototype Cybertruck produced with in-house dry cathode 4680 cells, a major cost reduction milestone once ramped. And by the way, look at this jump here. Tesla AI training capacity ramped through end of year. So this is H100 equivalent GPUs. We're going to go from 35 or so, 37,000 to close to 90,000 at the end of this year. It's unmatched. And so now a couple of things that were mentioned in the earnings call. So the 8-8 event is going to happen on the 10-10, so October 10. He said that it's because, well, he wanted to update some design things and show us a little bit more. Okay, I mean, wait another 2 months and you're getting a better event, so that's great in my opinion. The Roadster. Engineering is mostly done with production starting next year. I'm not getting my hopes up on that, so we'll see. Robotaxis. Unsupervised FSD robotaxi rides are likely by year end, definitely next year. I'll say probably next year. 4680 battery cell production is ramping up with dry cathode process cells launching in Q4. They are currently building 1,400 Cybertrucks per week. As for Dojo, here we got some actual valuable information. So Elon said that he's impressed by NVIDIA, but they're looking to double down on their own Dojo supercomputer due to the high NVIDIA demand. And so they don't always want to wait for NVIDIA for the availability of those chips. So they want to build their own, see if that works out. They see a path to compete with NVIDIA on training capability. Again, this is something that will take some time, but Tesla is late, but delivers. With regards to marketing, advertising, I've posted on X asking if they shouldn't be spending 1% of revenue on advertising, especially during the Super Bowl, during the 2026 World Cup. I mean, they can, because it's definitely not going to hurt them, in my opinion. They said here 2/3 of Q2 sales were to new Tesla customers, showing strong brand reach with, let's say, limited advertising. And to me, this is not something to be like, oh, 2/3 of Q2. Of course, I mean, it's not as if Tesla is now producing and delivering 10 million cars. No, it's still early days. So I truly hope this is 2/3 of Q2 sales and not 1/3, and the rest is returning buyers, because then, well, then you have a small problem, in my opinion. Moving on to Giga Mexico, I posted about this a week or two ago. If someone remembered about Giga Mexico, well, the expansion is on hold until after, I don't know why I wrote here Mexican election, but I think after the US election. Remains to be seen what happens with the tariffs there. My opinion here is that they're not going to do anything that will hurt Tesla, that will hurt US companies. So we'll see what happens towards the end of the year, probably next year as well. FSD licensing, no announcement date confirmed. It will only be significant if it involves millions of cars. So if you're thinking about a niche brand adopting it, forget about that, at least not right now. As for FSD expansion, so regulatory approval for FSD launch in Europe and China is expected by year end. Okay, that's quite exciting. Maybe that's also one of the reasons why the event has been pushed by 2 months, so it can be closer to that launch. Tesla will keep its energy software exclusive, leveraging their demand, scale, and existing lead. I believe that's one of the strong points for Tesla Energy. It's got the scale, they've got the manufacturing know-how, and they're quite early on that as well. So I believe they'll keep on winning. Maybe they will not keep the high margins that they have today, but they will still be a very, very dominant player in that industry. And as for the IRA tax credit, talking about Trump and JD potentially winning, TBD, remains to be seen. And so, me personally, right now, I'm in no rush to add more shares unless we go closer to $200 and maybe under it. Will it happen? I don't know. But let's be honest, do I feel that something will drastically change with Tesla in the coming quarters? No. I think we're going to see some changes when the compact car gets announced, gets produced, because that's when things could suddenly change, but for the good for the auto business. Of course, interest rate cuts will help that as well. The event could be a very, very good event. That's again later this year, but will it impact Tesla in Q3, Q4, Q1 of next year? Definitely not. The focus should definitely be on profitability. Margins, have they bottomed? Yes or no? Do we see an increase in demand for EVs? We know that right now in China, for the start of the quarter, the first couple of weeks, China weekly insured numbers are quite good. So let's see if that momentum continues. The future is bright, but I do believe that we are in a period where, well, Tesla, the business itself, is not going to move much from a Wall Street standpoint. It can move a lot from a research AI developing robot company standpoint, for sure. But for Wall Street, nothing will impact, or at least positively a big positive impact. Nothing will happen in the coming quarters. That's just my opinion. Lastly here, if Elon cannot be bothered to go on the earnings call, if he will always say the same thing again and again and say that if you do not believe that Tesla will solve FSD, if you do not believe in the robotaxi future, then you should not buy Tesla, just record yourself, and that's about it, because the earnings call yesterday was really, really boring. Anyways, that's all I've got for you today. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.